Okay. 1.6 billion of GAAP operating income in Q2 after restructuring and other charges, 1.5 billion of GAAP net income, 1.8 billion non-GAAP net income in Q2, operating cash flow of $3.6 billion, free cash flow of 1.3 billion in Q2. AI infrastructure capex was 0.6 billion, $3.9 billion increase in our cash and investments in Q2 to 30.7 billion. A record energy storage deployment of 9.4 gigawatt hours in Q2. Optimus began performing tasks autonomously in one of our facilities. Cybertruck became the best-selling EV pickup in the US in the second quarter. Let's real quick take a look at margins. So margins are actually, let's see. So total GAAP gross margin is up 0.6, let's see, 60 basis points to 18%. Let's see, if I look at energy real quick, energy revenue is up, doubled from 1.6 billion to 3 billion. Real quick, if I look at the P&L, I'm curious to see what the margins are for that. And then we'll look at other stuff here real quick, because I know that's a big one. So 3 billion in revenue, and then costs up to 2.2 billion. So it looks like $600 million of profit on 3 billion, which is about what, 20% margins or something. So it looks like they reported a doubling in energy revenue. Let's go ahead and read through the summary real quick. And then if y'all want to read through the details, if you have anything you want to add, we'll do that. In Q2, we achieved record quarterly revenues despite a difficult operating environment. The energy storage business continues to grow rapidly, setting a record in Q2 with 9.4 gigawatt hours of deployments, resulting in record revenues and gross profits for the overall segment. We also saw a sequential rebound in vehicle deliveries in Q2 as overall consumer sentiment improved, and we launched attractive financing options to offset the impact of sustained high interest rates. We recognize record regulatory credit revenue in Q2 as other OEMs are still behind on meeting emissions requirements, which is, again, like that regulatory credit story is so interesting. So what is it at real quick? Let's check it out here. Regulatory credits is up to 890 million for the quarter. Reg credits, 809 million in regulatory credits, which kind of hides the gross margin number. So let's keep going. Global EV penetration returned to growth in Q2 and is taking share from ICE vehicles. We believe that a pure EV is the optimal vehicle design and will ultimately win over consumers as the myths on range, charging, and service are debunked. Which is a very interesting bit of verbiage there. I don't think I've ever read them say anything like this, which is good to hear. Progress continued for our AI initiatives in Q2. We reduced the price of FSD in North America and launched free trials to everyone with the necessary hardware. These programs have demonstrated success and are laying the foundation for more meaningful FSD monetization. We expect to see an increase in FSD attach rates for our fleet as the capability improves and we increase awareness of the convenience and safety it offers if it offers users, which is interesting that they haven't really shown how much it has improved already. So that's a very interesting tidbit. So perhaps it hasn't as much as we thought. Overall, our focus remains on company-wide cost reduction, including reducing COGS per vehicle, growing our traditional hardware business, and accelerating development of our AI-enabled products and services. Though timing of robotaxi deployment depends on technological advancement and regulatory approval, we are working vigorously on this opportunity given the outsized potential value. Concurrently, we are managing our product portfolio with a long-term orientation and focusing on growing sales, maximizing our installed base, and generating sufficient cash flow to invest in future growth. Now, if we go down to the outlook portion, which is interesting, here, let's see what we got here. And so for volume, our company is currently between two major growth waves. The first one began with the global expansion of the Model 3 and Y. In 2024, the growth rates of energy storage deployments and revenue in our energy generation and storage business should outpace the automotive business. For cash, we have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. For profit, while we continue to execute on innovations to reduce the cost of manufacturing operations over time, we expect our hardware-related profits to be accompanied by an acceleration of artificial intelligence, software, and fleet-based profits. And then for product, which has changed from outlook, something that I've just noticed here. Plans for new vehicles, including a more affordable model, remain on track for startup production in the first half of 2025. These vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms and will be able to be produced on the same manufacturing lines as our current vehicle lineup. This approach will result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. This should help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines. Our purpose-built robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy. Okay. What have you guys seen so far? Who wants to go first? Two.
I did see that.
You go.
I was just going to say one note was in the outlook there. I don't know if it seems like they're signaling towards 3 million capacity by the end of this year. You could almost hope they produce close to 3 million vehicles next year. You can almost extrapolate that. Maybe it's too optimistic to think that, but it seems like it's a metric they put out there, 3 million vehicle capacity in the product outlook.
Stock's down 3% after hours, by the way.
The thing that jumped out to me, Farzad, you hit it briefly, but like the credits revenue is, I don't recall it ever being this high, 890 million. And so to miss earnings as significantly as they did, despite credit revenue being so high, that kind of leads to more concerns around the quality of their kind of core earnings. So this was something that I was expecting as this. I let off or basically saying the FSD take rate should logically plunge, and that's going to hurt earnings. I wonder if that happened even more aggressively than we might be thinking, because otherwise I don't know how the numbers are like this low, to be honest with you. So that was my first thought. And then the other thing was just on that, like the note they have about the pure EV is the optimal vehicle design and will ultimately win over consumers as the myths are debunked. Like this is what we've been asking them for like years. Hey, a lot of people have misconceptions. Like, why don't we do some educational advertising? It just seems like the most ridiculous own goal that they haven't been more aggressive on this front before. So now they're at least putting it in their earnings report, but like, how are you actually going to debunk those myths? That doesn't just happen automatically. So I hope they speak to that in the call a little bit.
Let's go, Nico. I know you wanted to say something, then we'll bring in Yash.
Oh, speaking of Yash.
Wow.
I get my juju ready.
There we go.
To pair with my mezcal. Yeah, doing it right. No, I was just going to say on the vehicle capacity for the next gen vehicle, I don't think they had various there before. And then the other thing that caught my eye was, I forget what it was. Oh, it wasn't here. The fact that in the past we've seen them maybe not necessarily talk about take rate or FSD adoption, but the fact that it's not here now after it went unsupervised and all that, it's the way everyone was talking about it in the community and on X and all that, it almost felt like there was going to be something here that was going to get broken out. I wasn't expecting that, but it definitely seemed like people knew things that I didn't know. I guess part of me thought we might see something broken out here about the take rate.
Yeah.
I'm happy they didn't personally, but
I feel if they said, hey, we think the take rate's going to go up as people realize the benefits, implies that they haven't seen it yet. I know there was like a report out there about the credit cards showing that only 2%, it was only a 2% take rate or something. And Elon said that's clearly false, but maybe it's 5%. Maybe it's not 20%. Maybe it's not 50%, right? So maybe there's still hesitation on people signing up for that $99 trial. Yash, let's go ahead and bring you in, my Juju brada, wearing the blueberry polo. Thank you.
Dude, beautiful. I love it. I wish I could be wearing mine right now, but mine's in the garbage. I think this earnings report is pretty much on par with kind of what we thought it was going to be. I agree, Nico. I wish we got some take rate info there, but obviously that just tells us that it's not where they think it was going to be. It's like nothing to showboat about. I tweeted this out this morning and I can't stay on here for long, so I'll just get my point now. We talk about EPS, and yes, it came down 10 cents or whatever it was, non-GAAP EPS under Wall Street. But that's missing the forest for the trees a little bit right now. And this is from me. I usually am what's projections looking? Let's talk about auto. I don't really talk about FSD too much, but it seems like this is such a front burner, short to intermediate term goal now for Tesla. It's not like this pie in the sky thing. And Farzad, we didn't get a date for robotaxi event yet. Have we in the report? I haven't had a chance to fully read it.
Just a delay.
So I wonder, are we going to get a date, do you think, for that today, right at the beginning of earnings call?
That would be nice, but I don't know if we'll get it. I think they'll probably wait.
The last two earnings call, Elon has answered the most obvious questions in his opening statements. So
That's fair. I just think it would have been in the earnings report though, if that were the case. And the stock's down what, like 2 or 3% after hours. It's really
4.5.
not a terrible
4 or
4%
5%
now.
now.
Okay.
Yeah.
So maybe it
5.2.
bleeds. I don't really know if there's anything Elon could say other than short of a robotaxi recognition of revenue or something like that happening this year that might stop. It's not really a big bleed anyways. We were up 5% the other day. So 5% here or there is just a wash, it seems like, for Tesla stock at the moment. All in all, I think robotaxi needs to be the front burner question for everything this earnings report.
Here's an interesting graph. Global battery electric vehicle market share, 12 months trailing. They're charting China's market share of the global versus everything else but China. What's very interesting here, so China is growing, and so the total is growing here, and it's mainly because of China. But it's so fascinating to see how flat, if you look at starting at Q3 of 2023, somewhere, let's see, it's over here. Q3 of 2020. Just see how flat it is. It's almost like it was designed. It's almost like it was designed for this to just stop. Don't make any more EVs. It's so weird. That's just an odd trend to just have it flatline versus everything else while China continues to grow. And I think that backs up a lot of the notions out there that say, hey, the Chinese are going to have a stranglehold on the Chinese market. And if you are a competing electric vehicle player, you better be careful because they're coming after you. So curious, it's a very curious graph here from an auto perspective. I don't know if anybody has any thoughts on that, but I just found that this just stuck out to me, this flatness here for everybody else as a percentage of total market share.
That's the BEV share, right?
Yes, sir.
Okay. To be fair, Martin Vieca in the past has said nothing matters other than total market share. I guess this is cool to see, but total market share is really what matters.
Just sliding through the rest of the deck, we got Gigafactory Texas South Expansion Data Center, beautiful glass building. Corpus Christi lithium refinery, looks like they're progressing on that. That's supposed to make 1 million batteries equivalent per year. I think it was the number that was given back when it was announced. You got the Cybertruck coding shop, Model Y and Quicksilver with 1.9% available interest rate. So a little bit of marketing there. Now available for Model S and X, Lunar Silver, new color, Powers, plus Powers 1 gigawatt-hour Sierra Estrella site. This is for Megapack and Tesla Energy. Optimus autonomously handling battery cells. So this was a demo that they were giving of the bot doing some basic movements and moving batteries from production line to a container. Some of the key metrics here outlining operating cash flow and free cash flow with the vehicle deliveries and the net income. Again, the net income number and the adjusted EBITDA number is for this quarter is heavily influenced by the jump in vehicle credits and the growth in energy. And then I got to sit down and do some math on the spreadsheet at some point. So Hans, I'll probably have you take over a little bit after we go through the deck here, if you don't mind. And then some of the metrics around operating cash flow and free cash flow. You can see the operating cash flow is on a downward trend with a little bit of stabilization here in the last 2 quarters. But over here, you can also see adjusted EBITDA net income sort of coming down from the peak of the second quarter of 2023. This is trailing 12 months. Vehicle deliveries, you can also see a flattening, slight downward trend for the trailing 12 months for deliveries. A lot of the things that people focus on for the short term and medium trend for Tesla. And then, some financial statements, balance sheet information, so on and so forth. So I'm going to sit down and do a little bit of number punching here. Hans, do you have some bandwidth to take over a little bit or have the combo? Yep.
Wait, did you just say number punching though?
Number punching.
Okay.
I'm going to punch some numbers in the face.
So yeah, let's open it up here and just ask, are there any other, maybe Matt, this would be a good time to go to you on energy. What is your reaction to what we're seeing now in the bottom line and the gross profits and then gross margins on the energy side of things?
Yeah, so energy is one where it was actually very close to what I was expecting. So I put out a post this morning. I forget exactly what it was, but I think I was estimating something like 87% increase in revenue on the back of 136% increase in deliveries. The actuals came in at around 84%. I was expecting a modest increase in gross margin up to 27%. They instead stayed flat at 25%. So the actual kind of numbers are almost exactly as I was expecting, slightly worse, I guess you could probably say, but really about as I was expecting. And I think there's really not a whole lot of a story there. It's just the kind of revenue recognition, the deferred revenue rules is why we're seeing that decrease, or not that decrease, but the revenue not ramping as fast as deployments. That's a kind of temporary item. The other thing that I was looking at a couple things while Farzad was speaking, so maybe I missed this, but there was on the income statement. Let me scroll down to where it was. There's
And
this
maybe share your
restructuring.
screen if you can as well, so we can see what you're looking at.
Let me see if I can share screen. All right. So there's this restructuring another charge of $622 million. This is related to all the workforce reduction stuff they did and some of the other just costs associated with those headcount reductions that they were doing. So this is a pretty big hit as well. I wasn't forecasting quite this high of a hit, but when you net out this being a one-time item with the fact that you also had the very significant one-time increase in the credit revenue, it's around $400 to $500 million higher than it normally is. So net, it's like a $100 million or so hit to the company. So that kind of makes sense why you have the earnings per share being so much lower. But still, I think it's generally hard to construe it as anything other than a modestly weak quarter. But that said, not really a whole lot off from what I was expecting. My adjusted earnings per share forecast was 59 cents, but I think they came in at 52. So pretty close. I don't think there's anything catastrophic here, but it's certainly not the like very strong. Whoops. I almost left the studio instead of stopping and share my screen. There's probably more negatives in here than positives, but I don't think it really changes the story of what's going to drive results from here. Like we were saying, it's not the numbers that are going to be in the deck today. It's the progress they're making on FSD. It's the new GPUs that they're installing in Giga Texas. It's mildly disappointing, I guess I would categorize it as.
And then Emma, did you want to jump in here with any thoughts on either what you're seeing in the report or the market reaction?
Yeah, the market reaction is not as bad as I thought it could be from what I would say is disappointing Tesla legacy business almost results in terms of EV manufacturing, gross margins, demand seems weak. They have to keep lowering prices or offer zero interest rates to get, and it's just a matter of time for the investment narrative to shift to the future business of Tesla, which it will bring up the manufacturing business along with it when the AI and the software gets better and the FSD take rates get better. But it seems like they would have put something in about the FSD take rates if it was exceptionally good, as some others have speculated already. So yeah, I'm curious. I think there's some points of friction. I think my mom just got a new Model 3 Highland. She traded in her old Model 3 for a new one. She's in Long Island and she called me out of the blue and I was like, oh, did you happen to do a test drive with you on the full self-driving? Because she said, they said after I drive for a few hours or a few 100 miles, I should come back and they'll do it. And she's not going to do that. But that's just like a point of friction. Remember, there was that promise to give everyone a demo of full self-driving when they have to buy the car. And now there's a point of friction. Oh, no, you got to drive at 100 or a couple hundred miles first, then you come back. That's just, if you could just avoid these points of friction of getting like new people that aren't tech enthusiasts like us to try the full self-driving and get them to use the free subscription, I think that would be a big help. So I don't know how Elon's going to address that. That's my concern. And just like advertising was, and I see on the 8th question down on state.com, it looks like Kurt C asked a good question. Do you feel you're cheating people out of the joys of owning a Tesla by not advertising? So I hope they get to the 8th question down because I feel like that's 2 years too late. And so I hope it's not 2 years too late from now when we're saying, why can't they get more people to try out the full self-driving? I hope they think of something. And that's my concern is Elon, he's the ultimate decision maker. And I don't know if he relates to the common person that's not a tech enthusiast well enough.
One thing, so if I plug in the energy numbers and I'm looking at gross margin, so the gross margin for energy is 24.6%. which is the same as it was in the first quarter of 2024. So they were able to double revenues, yet keep the same margin, which is, I think, something that people are going to be happy about. Auto gross margin, excluding ZEV credits and lease, is 13.9%, which is going to be impacted by a lot of the manufacturing of those cars that was done in Q1 with a lower production rate. So you're going to get that impact. Also, you're not really seeing a boost from Cybertruck yet. It's probably still weighing down those numbers. I would have expected that to maybe flip this quarter, but perhaps not. So we're still waiting for that to come through. Average selling prices for vehicles, excluding ZEV credits and lease, they're down 2.7%, while COGS are down only 0.24%. Now, again, those COGS are down on a previous quarter Q1, which is going to be a lot of the cars that would have sold through in Q2 that were at a lower production rate than what would be in the second quarter. So they were still able to lower COGS sequentially, but not as much, not enough to offset the 2.7% reduction in prices from a ASP perspective. Just to throw out some numbers there.
Just jump in here. Hans, can you box us all so we're all together? There we go. That's the view I like. Just so I can see everybody's face when I say something stupid. Get quick signal.
Hey, Nico. I like the Brady Bunch.
Hey, Nico. Right there.
Hey, Matt.
Nice.
Like Hollywood Squares.
Yeah, it's my favorite because then I can see everyone equally. Anyways, so first of all, let me.
Sorry, can I cut you off for a second? I'm so sorry. After hours is back to only being down.
That's what
1.
I was gonna
4.
say.
Oh, sorry, I ruined you.
Jeez. Wow.
Go for it.
I was gonna say we're only down 1%, and I was gonna say I was gonna make a joke about percentage. Anyways, the mezcal is very dangerous. I took the first sip, and it is strong. It's delicious. It's full body. I'm not a big connoisseur of mezcal. I don't know much about it, but this will be interesting by the end of this whole stream. That's for sure. And I've had one sip.
You have something to plug or something?
No, it's just a Tesla mezcal.
I like when Tesla earnings disappoints, we're going to just switch to reviewing Tesla liquor.
Okay. All right. So can I offer I don't know, maybe a person who's too bullish on Tesla, a different type of perspective on all this? Because I get what you're saying, Emmett, as far as FSD take rate. And I get some of the comments about advertising everybody makes. But if I'm putting myself in Elon's seat, I don't I don't want to cuss on here. I don't care about FSD take rate. It's honestly not what I care. It's a means to an end. The whole point of FSD is to get to robotaxi, right? That's what I care about, is how fast can I get to robotaxi, because that's where we're really going to print. And that is going to be the ultimate advertisement, is robotaxis out there, not actually going out trying to educate. And who cares about educating people at that point? Because if we can really make robotaxi a real thing, the way we talk about, the way Archivist talks about disrupting cities, getting to a point where it's silly to own a car, it just all answers or solves the problem that we're all talking about for advertising or take rate, or how do we get more people to adopt there? How do we get them to know about the technology? Like, it just seems like solving robotaxi, it's a domino. It's one answer that solves all the problems. And I think especially, and as far as you said earlier, yeah, every time Omar says this version is great and all these things, and to be fair, yes, he does, but at the same time, he has been right. Like every time, like it's the best thing that we've experienced to that point. So I think these are real comments, but 12.5 sounds yet another kind of next level. And I think they just see it trending so clearly towards that I think that's why they decide to, like, okay, why are we going to build new lines for this next gen vehicle that we're going to sell to people when it's just so clear robotaxi is what's going to happen next. I just think that they're so focused on this that they see it so clearly that it just solves everything. And I get that sounds like I'm just literally drinking his Kool-Aid, but I don't know, that it just seems to me like that's what he's thinking about.
Yeah, I think it backs it up. If I pull this up real quick, this is from Alex at AJ Tourville on X. This is from the earnings report we just went through. The Tesla AI training capacity ramp through the end of year H100 equivalent GPUs, showing a graph of how Tesla has increased the ramp of their capacity, which is what drives their AI prowess, is this training compute that they're starting to ramp. Between March and June, we've seen them being at about, call it 37,000 to 40,000 equivalent H100 GPUs being used in training. And there's going to be 2 jumps between now and then that will get them to about 90,000 H100 equivalent GPUs, which is roughly, definitely at least a double, the 2.5 times. And then Elon actually replied to this, and he said, important to note that we also use the Tesla Hardware 4 AI computer in the training loop with NVIDIA GPUs, currently at roughly a 1-to-2 ratio. Also, we're changing the name from Hardware 4 to Artificial Intelligence 4. That means 90,000 H100 plus 40,000 AI 4 computers. So What's interesting here is perhaps this number here doesn't include that AI4 that he's talking about, where they're going to start leveraging hardware for training, is what I'm reading here. Hans, maybe help us understand this better.
Yeah, no, it definitely doesn't. And it's interesting that they are now, we had heard that they were going to call hardware 5 AI 5. And so now for them to actually pull that in and say, we're going to do the same for hardware 4, the reason, and Nick can also elaborate on this a little bit more, but the reason that they are adding these hardware 4 computers, which are going to be set up in a cluster just like you would do these GPUs, which these are chips that are not originally probably designed to be racked and to be set up inside some nice, cool warehouse somewhere in rows and rows upon rows of computers, is because they, after they solved their compute bottleneck of, okay, now we've got enough H100s or H100 equivalents to train the great new model, whether that's 12.0 or the 12.4 model or the 12.5 model or the impending 12.6 model. Now that we can do that, we've got to figure out, okay, how do we discover every little place that we need to make a patch or a fix to this brand new model? Because the 12.5 base model is a whole different model than the 12.4 base model. And that's what they're doing with it, what looks to be this. They have a large installation of hardware 3 and probably hardware 4 computers now that's also going to be growing, but they're doing that. They're running simulation basically of driving scenarios that they have encountered in the real world. And so, where instead of saying, hey, let's just take the base model and we'll put it out to the fleet, and then we'll let the fleet find all of the places where the model's going to struggle, we're actually going to do an intermediate step where we try to drive, and they can probably accelerate time in this AI4 cluster to where for every second worth of driving that a hardware, Nico, do you think that's true? Can they accelerate time or not? Do they have to run them at essentially 1-to-1 clock speed?
You're going to be limited by your bus speed no matter what.
And
so,
then if
but-
you all do me a favor, just make sure it's translated so that our audience can understand some of the technical details.
So I'm trying to understand what Elon just wrote here, because this, I feel like he's conflating terms, but I'm not sure, because hardware 4, my vehicle has hardware 4, but I feel like he's talking about something else when he says hardware 4 here.
I don't think that's true. I think it is hardware 4. So this is where what I'm relatively confident is that they're taking the hardware 4 computers that would normally go in a car, and they're making a cluster of these. So they're putting a whole bunch of these side by side and rows up and down to simulate driving billions of miles through, not just, these are not simulated miles necessarily of pretend data. This is all of the cases where they have collected from the real world area, like intersections that were challenging or pedestrian behavior that they've seen that was problematic, and they've saved all of that over time. And now they want to run, this is basically unit testing for the FSD software. And so after it gets trained out of the H100 cluster, then it goes into, and it gets fed into this hardware 4 or AI4 group of computers, and they try and do all of the validation testing there that they can before they start rolling it out to anyone's actual physical vehicles.
So just to make sure I understand, so it's basically another step in the process. So it's a way for them to test what the training. So by December of 2024, when they have the 90,000 H100 equivalent GPUs that generate some form of driving outcome, then they feed it to 40,000 AI4 computers by then before they release it to the cars, and gather a lot of the data that those computers are generating, saying, hey, these are the outcomes we're creating based on the training data. And then they can use that to make the
and then
training
they're
better
probably
and better.
taking that and feeding it back through another fine tuning training run to make some quality improvement adjustments to the model. So that's where you're going to get your 12.5.2 is going to be one where they did some retraining on some areas that needed quality improvements. And then point three is going to be an additional set of retraining on top of that, and on and on.
Makes sense. Got it. Questions there, Nico? Based on what?
I'm just trying to understand what this means. Is this their actually how they're trying to, shift left on getting feedback? Is this how they QA? Is this what they're using with simulation to, when he says it's thousands of miles between interventions, is it because this is what they're using? Is it because that's what they're seeing in the fleet? Are we rendered useless at this point other than for feed and scale input and intervention? I don't know. It opens up so many more questions. And then, yeah, I mean, I don't know. It's so many questions. That's what Elon does. He says these 3 or 4 lines and you're like, what exactly are you saying by this? And then it's like this game of, what do you think he means?
Yeah, I would say that I think the comments that he's made recently about how hard it is to find the interventions, I think this is probably the answer. That's the first way that they're trying to solve that problem, is now that we
Yeah.
have so many miles that we need to go before we find an intervention, we need to have a new tool in the toolbox in order to help speed up that problem. This became the bottleneck. And I think this massive installation of these rack mounted hardware for computers is the first thing that they're going to use to try and solve that problem. If it doesn't, they'll find a new way to try and solve it. But I think this is the primary and hopefully sufficient means of doing that.
Yeah. Assuming we're reading that correctly, which I imagine we are, I think you're spot on, because when Elon first said that comment about thousands of miles, whatever, between, it's hard to tell which model's what. My first thought was like, I don't know, man. Like every time I pull into a parking lot, like you're gonna see an intervention there. And sometimes I just want to turn around because there's a building being built and I want to see the progress, the intervention there. It's not like you don't see them. Like, where's this? And then I thought, okay, maybe it's all these drivers they've hired. I'm like, okay, man, okay, maybe, but that's such a small sample size. And so this would actually answer a lot.
Real quick, Tesla stock is down about 3% after hours, 3.5% now. It was down about 5.2% after going up, being down 1.8%, and now it's down 3.5%. So within the scope of movements, especially given, let's say, that the low quality of earnings with the really high rec credits of 890 million, which was over half of the net income that Tesla printed, stock is down 3.5%. So we've seen much larger moves on earnings reports that,
Yeah,
So
as far as I'm personally happy with the reaction to the stock, given the kind of disappointing earning result in the past. After a nice run up in the month leading up to earnings, when you have a disappointing earnings report, the stock would easily be down 10 or 20%, but we're down less than 5%. That's, to me, that's a good sign. At least I think, it seems like we've hit a floor, maybe, or we're close to the floor of Tesla, and hopefully things just get better from here in terms of earnings reports, earnings quality, profitability, demand showing up again in the earnings reports. So I think I'm trying to stay optimistic in what to me seems like a disappointing earnings report, I guess is what I'm saying.
Yeah, I think their ability to also add cash to the balance sheet this quarter is something that I don't think that's going to impact stock price at all. But I think from my standpoint, it speaks to how it's just financially strong business. Even if we're going to have disappointing quarters from an earnings perspective, they were still able to add $3 billion to the balance sheet. They were able to bring down inventory by about $2 billion by, let's say, matching production to deliveries. But these are, if I'm thinking about it, these are inconsequential within the context of artificial intelligence, FSD, and so on and so forth. I think it's a waiting game, such a waiting game with the story right now. I think in the past, this story has had this sort of, I don't know if you guys agree with this, but it's with the deliveries and the ramp of the Model 3 and the ramp of the Model Y and so on and so forth. If you're looking at the auto story, it was a little bit more clearer to see where this was going, because there was actual data out there that you could touch and feel. Whereas this one, because they're trying to solve something so novel with full self-driving and the approach they're taking, it's much more of a black box. It feels like a lot more of a black box. So even in this situation where, let's say, Tesla investors like ourselves are confident that Elon and team and everybody at Tesla will get this done because we're actually feeling it in the cars themselves, it's still a black box because it's a software thing instead of a hardware thing. And we can't actually go to factories and look at how many cars they're producing. We can't really, the only thing we can look at is like how many H100s they're buying. That's the only thing that's trackable, right? So I think that's what's interesting about the story now. That's the kind of feeling I get. I don't know if you all agree with this or not, but.
I agree.
Yeah, I agree. But also, you got to keep in mind, I know Tesla stocks been up like crazy in the last month, 2 months, but it's still, we're in a slowing economy. Rates are still crazy high. Like, it's not like things are just rosy out there either. So, not trying to make excuses for a quote unquote bad report, but they've got 18 days worth of inventory, which is essentially zero, right? If you think about having to ship vehicles around, and presumably the Fed's going to start cutting in September. I think to your point, Emmett, like the upside, it hasn't even really started to play out yet. Once the Fed starts cutting, interest sensitive stocks should start to seize benefit from that point of view. So I think it's still really early in everything. And we also might be going to a recession next year. Like you never know.
What do you guys want to hear on the earnings call? What's going to turn the perception around a little bit? Because we've had some of these before where the report is a little bit, but then Elon kind of goes into salesman mode and the stock will actually go back to the black. What do you guys think would take, or is it possible to turn it around based on stuff in the earnings call?
I think if he leaks some details about the upcoming vehicles and gives like a definitive timeline of the robotaxi unveiling, because as of now, it's still up in the air. I mean, we all assume it's going to be October, but you don't really know until you have a date, right? If he puts a date down, and then if he also, I think, discloses some stats or metrics on full self-driving subscriptions of the people who tried it for more than X amount of miles, the take rate was this high or something like that, I think that would be positive. I'm not sure they'll disclose that data. I hope that type of question is asked, but it'd be interesting just to see what kind of data he would show for that or explain.